If you can hear me, let me make sure this volume is all the way up. Alright guys, just want to say, I want to give thanks to my Father in heaven and His Son Jesus Christ, because without Him there is no me. So I just want to give thanks and praise. To give thanks, because we are all beautifully made. Beautifully made. Doesn't matter what situation you're in, physically, financially. What matters is just believing that you're beautifully made. And have some faith. Alright. I'm not a financial advisor. This video is for paper trading purposes only. Blah, 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 blah. Now, this is actual, factual. 600% gains. And if you can count from 1 to 10, you can really do this. Seriously. I'm gonna try and keep this video as short as possible. I'm not sure if I can cover everything, but if I have to make it 2 videos, I would strongly suggest you guys watch both of them, because it's very important that you understand the concept. This is the SPY, a 1-day chart, as you can see here. You can see up here it says day. Now, this is how it's been moving for the last couple of days. You see, price was up here, came down here, went up here, came down here. But I'm going to show you something real quick. Let's get rid of this. Let's get rid of this stuff, and I'll show you the 600% gains later, if not in this video, in the one that follows behind this video. Let's see if I can keep on track here. This is, as I said, a chart of SPY. It's actually trading right now. The time is 1:44 p.m. August 10, 2022. But what I want to show you here is that you see prices. If you look at the prices over the last, since August of 2020, it's just been climbing up, climbing up. It did a reset here, a reset here, it reset, pull back here, reset, pull back here, reset, pull back here, and so forth and so forth. This has been the, I think by far maybe the largest reset. We had almost a whole bar and a half there. Well, not quite. This was more in 2020 during the COVID time. All right, let's stick to the guns here. What I want to show you is how easy this can be. I'm gonna show you real quick. How this thing moves. I hope you guys can see these numbers, because it's important that you can. Alright, let me try to put it over here. Let's adjust this to right side. Now, some of these numbers are common to the market, to the fib. 50, 61, 768, 0, 100. 618 is a very important number. And if you notice, I have these lines, a different color from the purple and these lines a different color. All right. The numbers you can I can make them big enough so you can pause your TV so you can see them. All right, these are the numbers, and it's called fib. On this chart on TradingView that I use, you'll find it here. But in any app that you use, they should have the fib. You just have to open the control of the fib and punch in your numbers and mark the ones that you want to see. Alright, you just punch in your numbers and mark the ones you want to see. Alright, let's keep it moving. People say that there's only one way to use a fib. Most traders will tell you, oh, you have to know to use a fib the right way. You have to know to use the fib the right way. That's all they keep saying. You have to know to use the fib the right way. Well, yeah, there's a right way and a wrong way, and there's a right way and a right way. That makes any sense. But let me just give you a quick example of what I'm talking about. Alright, you have, let's see if I can get it here. For people who are, going to trade like this or practice this or try it out, you really want to paper trade this for at least 2 months before you start, putting money into this thing. But the idea behind using it is that if the stock is trending down. As a matter of fact, let me just get rid of, let me go back to, let's say that you are looking at it on this day or the day prior to this day, which is March 30th, 2022. And the next day the candle comes and it goes down. You can put your fib on it. And if on the next day, you gotta have patience with this. If on the next day it's trending down, okay, this is 100% of the move. The idea behind this is that if it pulls back into the 78 to 90 area and show a rejection, then you want to take the trade going in the same direction. So these are the 3 days that you're looking at. You're sitting after work at home. This is what you see. You put your fib, and on the next day you want to see what happens. Now it kept going down. So what you're going to do is you're simply not going to take any trade. You're just going to put this down. You don't know where they're going to put this thing. And then the next day comes and it goes up. You're like, wow, I wish I was in that trade. No, you don't. But what you're going to be looking for now is that it's moving back up to your 618, which I said before, it's a very important number. But you still don't know if it's going to reverse off of this and continue going down. Because you see we have a top, a high, okay, we hit a high, we reverse from that high, and then we pull back and reverse from the day prior. This is the close. Hit the close and just went all the way down strong. with 121 million trade on that particular day, which is a lot. This is a good day to make a lot of money. And then on this day, it went down back into 80 million with only a dollar move. And on this day, 50 million with only $3 up. All right, so we're still not trading. We're just not trading. We're watching. All right, so now we have on this day, you see that it went up to your 70 and reverse. Went to your 70 and reverse. So you're still watching. Now it went way below your 100 mark, and you're still watching. That's all you're gonna do is watch. You're not gonna trade. It came back up, hit the 10 and the 17 here, or just above between 10 and 17. You're still watching. This is my negative 31. This is a good number too. It's a good number that I found works well. And it goes down below my 31. See that? It gaps down from here to here the next day. Unbelievable. Look at that gap. Woo! And it pushes back up and tests the bottom of this green candle here. See that? It came back up, push, test. Listen to what I'm saying to you. I'm giving you clues here. I'm going step by step with the candles and showing you what's happening on each day. So pay attention, please. Just focus on what I'm trying to show you here. So yeah, so this comes up and it tests the 31, and then this candle comes back past the open of this, the high of this, to test the open of this day, and pushes all the way down strong again. It comes back up. It goes above the open of this day, but it didn't break it did not break the 31. See what's happening now? It opens here, tests 31 again, and goes down. So how would you trade this? Well, here, let's go back to here. So when you see this now, it opens way lower than 50% of this body of this candle, first of all, and then it goes past it and goes all the way down. See that? It goes past it and goes all the way down. Which means if you look at the body of this candle, it's almost the same size and similar amount of trades. So this, this is not really going to give you much. It is going down and it is pushing down. The wicks on the bottom are longer, which is a good thing to see. But now this candle comes in and it gaps down, tries to come back up, and guess what it did? Test the bottom of this candle. See that? It stopped right there and then just sank. Clues, guys, giving you clues here. Now this candle opened almost 40% higher into this candle, about 40%, and then just went down and climbed all the way back up. Now this is, if you look at this candle opens here about 40% up. It went all the way down here where you would have drawn your fib now on this day. And right away this tells you that something different here. There's something different here. Look at the way this candle is set. It opened, it went up a little, and then it pushed all the way down, and buyers then came in and pushed the price all the way back up into this big candle. So I'm saying it pushed it all the way back into this big candle. Now the next candle comes in, it goes up, touch your 61. Touching the 61 and not passing it on this day is a big clue that on the next day, if the price open and don't break that 61, it's going to go down. That's the clue. You have these two candles, and this one is telling you that buyers are coming in. Okay, we have names for all these candles, but I don't want to give you the names yet. I just want you to pay attention to what I'm saying. So this candle have a long wick, right? The wick is so much longer than the body, 90% almost. When you see a 90% wick at the bottom of a trend, 90% of the wick, okay, that's buyers on the final lap pushing that price back up. So on the next day, the first thing you should have done is to see how far down into this candle the price would have gone. My rule is that I would, if it goes 50% or more, not trading it to the downside. It would have to go to the 50% of this candle. And let me show you what I mean real quick. So on this candle is a spread of 449.14. So this is $4.24, negative $4.24. So I would go to $2.12 right here, $2.12 right there. And then on the next, I'd mark a line there. And then on the next day, if price opens and touch that line, goes down to that line, and passes it, it's going to go down. If it goes to that line and go up, and start going up, it's going to be an up day. If it don't go to that line, but go, this is about 25% down, I'm looking to trade an up day, not a down day. I'm definitely looking to trade an up day after that. But let's get back to our these are all the tools you have. You have measuring tools and all kind of stuff in trading, and that's why I like it so much. So it came in about 25% at my 24 mark here. And as you can see here, this is 100% of the move, and this actually came in at the 24% mark and went up. So it went up here and went up here just day at top of the 61. Now after this day is over, I'm thinking, okay, well, it hit the 61. So tomorrow, the day after this, I'm gonna mark my lines up the high, mark it up the low, mark my 50% line, my 25% line, right? I'm going to show you that later. And then on the next day, if it breaks, if it don't break the upper line, like look at this, it did break it, it broke it, it went up to my 70, which is even better. That tells me it's going to reverse. Rejected here, it rejected the 618 here, and it next day it went up green. Like this candle was green to try to trick people, and stopped at just below my 70% line here, which is also what? The open of this big candle. See that? It didn't want to pass the open of this big candle. So there are your clues. Even 2 days, 3 days later, 3 days prior. Okay, rejected it, and that was it. So once you see that rejection from that big candle, especially big candles like this, you got to keep these candles in the prices of these candles in front of you when you're trading, because this is this high, this open, this low, and close are all going to be important numbers in the day to come, because this is a huge candle. All right, so you would have taken the trade here definitely between your 60 and 70 and 78. You definitely take the trade on a reversal here, and that's see, and that's when it tanked the next day, and then it tanked all the way down here with a big gap. Can you imagine if you're taking a trade here that day? Every dollar would have probably given you $10 or $15 on this the next day. If you had even caught it here at 457.18, you could have sold all the way down at 444. You know, that's a $13, $14 drop here. You could have sold $15 drop. That's massive amount of money. For every $30 is about roughly $300 to $500 for every $30 on a move like this. So yep, so we're testing the 10% here, and boom, it rejected it twice. Drop again, drop like a dead fly. Oh my goodness. Drop down to my negative 7360 line. See that? I still haven't moved my line from here. I still haven't moved my line, so you see it's just dropping on my lines here. As long as it doesn't close below it, I'm thinking it could be a reversal. So I'm not, after I trade this day, I'm not really going to do anything until the next day I see where the price is going to go. 50% above, 50% below, and then I decide. And boom, it opened, it went up above, broke that 31. So now a lot of people took that trade to go up, thinking it was going to go up to here, and rejected this 0 or the 10 again. Sure enough, it did not. So a lot of people got caught here. And all these people who bought puts here were jumping out like crazy because they thought it's going up. It broke the high of this day, and it went up about, I'd say about 10% roughly, and then just rejected all the way back down to here, and then they push it back up to here. Alright, and next day it didn't break the high, it broke the open. It went up about, I'd say about 20%, and then I'm sorry, it opened here, it went up about 20%, and then came back down to about 5% above the day before. Man, this time is going by so fast. So yeah, so that's it. That's the fib. Time is going by so fast. I still have so much to say, but let's jump to what we. All right, let's get rid of this. Yes. Now, we're going to go through a couple of steps here. Step 1. You're going to draw some lines. The prior day. You're going to have your line here, the high, the low, and a center line. Okay? Then you're going to go down to maybe the 1 hour. And this is the day. This is that day. Let me change this. So you guys can see this thing better. Low and a center line. So that's pretty much what you want to do. You want it the day before, or sometimes even two days. You could do that too, 2 days prior. You know, beforehand that's easy, but sometimes if it's higher, you can even go 3 days back. And you want to keep these colors different so you can identify what's what. So you know that these three are your lines for that day. So what we do from here is that we go down to a lower time frame. 5 minutes, 3 minutes, 1 minute. It's all good times that you can use. Here are your lines. Let's do a playback. See, price is still going. Still going back and forth here. You put your fib here to here, and you just wait till it comes back to this point here, and wait for that big candle. And I got so much more to show you, and the time is going by so fast. But I hope that you guys really watch all these videos, because there's still a lot for me to tell you. So if we want to start with this day, let me start you off on this day. So okay, it's now 8 o'clock on that day. Next candle comes. Next candle comes. Boom. We have we're waiting for a 9:30 candle to come in. Eastern Standard Time. Boom. It opens, right? This big candle that opens. You want to mark the top of this and the bottom of this. It's very important that you do that, of that first candle. This is a 5 minute time, whatever time you're on. 5, 3, 2, 1. You want to mark the first candle, top and bottom, because it will always come back and test. Price will always come back to test the high, the low, the open or close of that candle. So we don't have much information still from this. We're still waiting to see what's going to happen. We have our high of the day before over here. The low is here. The low is right here. So first off the back, you know that this low of yesterday is also where the candle opened. Candle open and stop above the low of yesterday, the day before. So that's telling you something. So now we have a high, we don't really have a low. This is an inside candle. So you don't know what's going to happen yet. We're waiting. It went up. You see that? It pulled back first. Let me make this bigger so you guys can see this thing. I want you guys to really see this thing. See how these candles behave. Watch the candle, how they behave. Boom. Big red candle. Pull back a little. We still don't have. We have a high and we have the low of only one candle. It's not really giving us much yet. All inside candles. Now, there we go. So what you're going to do here right away, as soon as you see this, you're going to pull your fib. Okay, you're going to put it. You're 100 up here or you 0 down here. Now, that's how everybody on YouTube teach you how to do it. But I don't feel like I gotta be flipping my chart every minute. So for me, I use the 78 to 90 up here, and down here I use the 28 to the 17, 10 max. and even at the 3 Supermax, if it goes here and rejects, it's going to be a strong downhill from there, uphill. But anyway, so we have the 100 up here at the high. We have the 0 down here at the low. And we're going to wait. Now we're going to wait and watch and see what happens. Boom. It breaks it. Comes back. Guess what you're going to do? You're going to move this down. You're not taking any trades. You're just going to move this down. Okay, it flipped out. I mean, there. All right. You're just going to move that down, all right? That's all you're going to do. And you're going to wait. You're not taking any trade. You're not ready to take any trade yet. You could have traded this, but we're not going to talk about that. We're talking about something simple. You're going to wait, and this is what you're going to do. It goes down again. See that? It goes down. Now it's green. You're going to wait. And you're going to keep waiting. You got to be patient if you want to make money from this. And it goes down again. And it didn't break the low. There we go. You're going to wait. There's other trades in here, but you're gonna wait. Don't feel like you're missing out on anything, because you're not. It's going up. It went through my 30, my 38, my 43, and it's going up. What number? It's a significant number in this? 618, 50, 70, 718, 786, 8180. Those are my numbers. Rejected the 50. It tests the 50 again. Go back up. And boom. Where's it going? To my, it closed below my 61. And it's almost at my 70. So now I'm interested. I'm interested in taking the trade back down. But I'm going to wait to see what happens with the next candle. Boom. It rejected it. It did close above it, but it didn't break the high. So on the next candle, we're gonna, if the price passes here at this point, we're taking the trade. Now from my 60, you got to have a target. Boom. See that it went up, rejected, and came back down. So at some point on this candle, I would have taken the trade. Boom. See that? It went down red and went back up green. So if you're taking the trade on this candle, when it went down red, easy, 10%, 15% right there. Easy. Went back up. It rejected my 70 again. If I sold on this candle to take my 20%, I would have bought on this candle again. If I didn't and I'm still holding, it would have taken probably 5 to 8% out of my money, but it would have given me back at least 5 to 8% of my money on the same candle. And then guess what happens? Boom. So these you see what's happening here? It went up, it went through my 618, it came up, it tested again, it rejected it here. This is where I would have taken the trade. On this candle, it first went down and was red. That distance here from 411.90 down to 411.37, they would have yielded you about a 10% gain. And if not, If you hold and it went green and went up here and rejected the 70, which is the best place to buy, one off, then you would have hit this candle and this candle all the way down here for at least 25%. And then look at that. See that? Now, you see the significance of these candles, these rejection. What you're going to add to this to help you make a better decision? You're going to really start looking at the volume. You see the volume up here? You have the volume of 72,000 transaction, and it moved 30 cents. You have the volume of 28, and it moved 18 cents. That's less than half the volume that moved the price half as much as this candle. Okay, 1818 is 32, 6. Sorry, 1818 is 36. So this moved it with less volume at a higher percentage than this candle, even though it didn't move the same amount of money. Over here we had an indecision candle, but for me it rejected my 618, so I would be getting in here. It would have pulled back here, but that's okay because it's still, I wouldn't have lost $1, $2 on my contract. It didn't break the high, but on this one it would have broken my high on this candle, took me back maybe a couple dollars, and then I would have held, because I would see that it's going up to my 70, and that's a rejection line for me, and it did. It rejected here and rejected here. Now, if you want to do this and do this wisely, you want to buy 2 contracts. You don't want to only buy one. You want to buy one here, and when you sell on this candle at the bottom, you keep one, and that other one would have gone back here, but you would have made maybe $10 on this candle, depending on the contract. I'm talking about out the money contracts and options. You would have made $10 on here, and you would have sold and kept one, and then you would have lost $10 here. But the $10 you would have lost, it would have been the $10 you made here. And some people get emotional, they jump out because they get frightened. But for me, I would have held, and the second one I would have held, and it would have gone all the way down here for at least 100% gain on my money, without a doubt. Whatever I put in, I'm getting 100% on this run, maybe 110%. But this candle is humongous on a 5-minute chart. Look at the size of this thing. This is not regular traders like you and I. This is big money. This is big money candle. See these candles right here? That one, this one, this one. Yeah, these are all big money candles. I mean, this is a 5-minute time frame. This thing is move almost $1 on one candle. You know how much money it takes to do that? Not your money and my money. Definitely not. But after this move down, as soon as this candle hit and start pulling back, I would have gotten out. I'm not a greedy guy. I don't care where it goes after this. Once I get in on my 70, I normally try to get out on the 10-3, because I know it will come back and retest this. It can retest this line and go back up. So if it had hit the 3 and started to go up, I would have gotten out. So I'll take my profits here and get out. But sometimes it goes so fast that even before you take your profit, it passed through the line, which is good. It's a good sign. And of course, boom, it pulled back all the way to the 10, all the way to the 10. Stop at my 3. See that? It stopped right at my 3. And of course, there we go. It reversed. You don't want to, when you're doing this, you don't want to buy. If you bought here and you sold here, you can get back in here, but that would be chasing. It's a dangerous thing to do. Even though it looks good, because we can replay the chart. It's a dangerous thing to do because it could have hit here and then this big candle come right in afterwards and take you all the way back up here. You want to buy only, you got to sit and wait. You see these rejection on the 61, you take your trade. Even better, if you take it on this green candle, it's cheaper than taking it on the red candle. You get it cheaper, and right as in a green candle, the rejection, you start making money immediately. On a red candle, you have a pullback, you're going to lose some money. On a green candle, once it rejects my 618, I'm getting in. I'm getting in. You know? And once I get it up here, it doesn't matter what happened below this. I'm still not going to be losing any money. And then on this candle, on the 70, you can add more depending on your budget, and you just ride it. And then for me, as I said, I would take my profits 10, 3 max right here, for more likely 100% gain. But if it went fast enough, I would have held, and just as I see it tips and hits rejection, I would have gotten out. So this is how you're going to be using the fib. Now there are other things that let me show you that it doesn't really matter which way I turn these things. You know, it's, for me, they say we have to put 100 up here and 0 down here for this down move. On the up move, you're going to put the 0 at the top and the 100 down here. Like on the green one, you'd put 100 down here and the green for a continuation to go down. Okay? But let me flip this around. Let me reverse this and show you that it's the same thing. I use it comes down to my 100 and it goes up, and I use my 28. This is my number one rejection line if it's going down. So it doesn't matter for me which way I have this turned. If my 28 gets rejected, and if I had this turned my way instead of the way that people show you, I would have not bought until I see this rejection off my 28. But for me, I find that my 28, 24, and 21 over here is a lot more dependable than the other way around. So now down here, as I say, you would have taken it to your green here to watch what happened. Now it's going back up. You want it to come back and reject what? Your 50, your 61, 70 to go up. Okay? If it comes down, this is why I like my numbers. If for me it comes down and stops somewhere and then rejects my 28 to go down, I'm taking the trade to go down. Okay, so now we gotta move this. See that? We gotta move this. So for me, it doesn't really matter which way I turn my fibs. Okay, we got a rejection here. Nothing going on. We're a higher high, a rejection, so we move it up. What do I want to see here? I want to see it come down to maybe the 50 or even my 61. Rejects it. If it rejects it, I can take a small trade going up back to this here. If it comes down to my 61 and then goes to my 28 and then rejects here like it did over here, rejection candles with wicks, I'm taking it to go down. You see what I'm saying? So it's coming down. Don't care about it. Not missing any money. There's lots more money to be made every day and every moment of the market. Now you see that? Reject my 21. See that? It's rejection on my 21 right there. Go back to the 17. Come back to my 21 again and rejects it. And there we go. It reject my 24 and it closed below my 28. Now I'm interested. more than likely have my trade set up to click that button right at this moment when I see that. And boom. See that? Just like I thought. Now we have a couple of things going on here. Here's the line that was yesterday's low. It's almost the same as my 28, right, between my 28 and 24, and it rejected it. So these are the things you got to keep in mind. So once you see that rejection, I see that rejection, I'm clicking my button for that trade, and I'm gonna trade it all the way down to maybe my 80, my 81 somewhere down here. Or if it reverses on me, I'm getting out. Hit my 70, went back up, rejected my 38, rejected the 50, hit my 70 again. I'm getting out because this is 2 hits. I don't wait for 3 hits. 3 hits can create disastrous situation. So I come down, hit the 70 twice. That's a double hit. I'm out. I don't care where it goes after this. I'm out. And it goes down to the 80. That's okay. Double hits. Double hits can often, a double tap between a couple of candles can signal a reversal. So I don't play with those things. I take my money. Guess what? This is going to be a couple dollars more, right? But I'm guaranteed when I sell here, I have those couple of dollars in my pocket. And then boom, kept going to retest down here. That's why it's good sometimes to have two trades in. So you could sell one and hold one. Or if you have more money, you buy 10, sell 5 and hold 5. See that? Now, this is just a quick idea of how the fib works. I haven't gotten to teaching you how to identify it with the volume, with the candle, and I want to show you guys some other stuff that can help. Like for instance, I have this alert bar. This shows me the open and open high and open low of that candle, automatic. I don't have to draw in the lines. So these lines I don't normally draw. I just put on some sort of indicator that helps me to identify that. I don't know if it's hard for you guys to see. Let me change the color of it so you guys can see this. I can go over the indicators in the other. So you see, this is my open candle. This is my low of the open candle. And these lines are important to keep in mind, because if you look now after the fact, see all of these rejected that open low. Then it broke through here and went down. Then it came back up and went right through it. When you see it go right through it like this, man, you know that it's going to shoot for the star. And it did. It shoot for a higher high than the open, than the last high. And that's another thing. When a candle goes up, you got 3 wicks up here. You got 3 wicks of rejection. It's a good sign that it's going to reverse. You break this high with the green candle. This one didn't break it. This one broke it only by 3%. 3 to 0, 3%. That's definitely a reversal. If it broke it and stayed up there, then it's a different whole different look, different feel. But it broke it and came back all the way down here, which tells me buyers are getting exhausted. They don't want to buy anymore. They're tired of buying, and now sellers are coming in. At the same time, all the people who bought long calls here are getting kicked out. So that now the market is being flooded with selling from no more buyers, as well as all the long calls that got stopped out here. I mean, it sounds like a lot, but you get it. Just like learning your ABC, you get it. Now, as this thing says, can you come from 1 to 10? All you got to do is, just like I said, you're gonna put a 0 or 100 here. Wait till it hits 6 or 7, which is the 618, 778. You know, just it. You just gotta wait till it hit 6 or 7. You could, for all I care, you could just put 0, 6, 7 down here, 2, 2 and 3 up here, and wait for the candle to go into those areas. Same thing, simple. If you want to keep it as simple as that, as long as you can count, you're just gonna follow along with the trend until it stops. When it starts to go in the opposite direction, you just count. Is it going to go back to number 7? Let's see. If it goes back to number 7, you take the trade. You want to practice this. You want to practice the feeling of identifying those areas and the reversal. You don't want to just jump into it. Yeah, it works. But are you mentally prepared for it? When these candles are moving, it's totally different. Yeah, I gotta show you these guys. I gotta show you these. All this stuff is so. There's a lot of information that you can get from some of these indicators. You can see habits here. This is a gap up and a gap down. GU is a gap up. GD is gap down. As you can see here, the pattern you have when it's going down. When it's going to reverse, you have a gap down, the red candle, gap up. How weird is that, huh? A red candle gapping up before it reverses. So you have a gap up, then you have a gap down, then you have a gap down on the green, and then you have a gap up, then you have a gap up again on another red candle, and then you have a gap down. So you see, there are certain behaviors that the market will always duplicate. You understand what I'm saying? You have a gap up, right? Then you have nothing here, indecision, and then you have a gap down on a green candle. Then you have a gap up and it turns back red. You get it? It gaps up. The price jump up. Hit their head on the ceiling right here. Ouch, that hurt. And then just they fell all the way down. So when you see this, look at this pattern. A gap down on a green candle with a long leg. Right? This is consolidation right here. It gap down. And then boom, it gap up. What do you think they're doing? They're taking out long calls here and they're faking people out. Well, gotcha. You thought it was going up. Gotcha. And it ain't going up, and it just reversed. So there's a lot of little things that you can look at. Also the volume and the price movements in this. I'm gonna show you guys all that stuff in the coming videos. These are the things I want to show you guys. You got these indicators that at a quick glance it helps. See that? This is another volume bar here. Instead of it being up here, you can just go here and it tells you instantly with these numbers over here on the left. So if you notice something here real quick, let's look at what I'm going to show you is I use lines to mark low price movement, medium price movement, high price movement. Low volume, medium volume, high volume right here, right? That's a high volume. This one will be a medium volume. This one will be a small volume. Now when you have small volume, big price move, you notice the price move here is not as big as the price move here. The volume has increased a little bit. That tells me small volume, big price move. It's a sign of a reversal. And then the follow through, we have more volume, right? Not as much as a price move, but the volume has increased. That tells me it's a continuation candle. Then you have big volume here on this white candle. Big volume, big price move. That tells me sellers are serious. And it also tells me there's a possibility that could be the last candle with that big price move. If I see something this big in a price move, I'm getting out on that candle. I'm not gonna wait for no more bigger candles. Not doing it. All right. Well, I thank you all for watching the video, and I'm gonna continue with some other videos and go through all of these things that I use, so you guys can get a better idea of how this thing works. But the major thing you're gonna have to learn is the volume and price movement. All right, volume and price movement. But for the simple fact of practicing, you're just gonna get your fib, put these numbers, count from 1 to 7. You're gonna draw your fib line, top and bottom, from here to here. Let me show you. You're gonna go from here, this point, to here, because this is where the last candle is, and that's where you draw your fib. That's where you draw your fib, right there. And then you draw the other one to go back from here, go up to there. All right, and you do the same thing, count to 7. If you use these numbers, you don't have to keep flipping your fib around. If you use these numbers that I use, the same exact numbers, then the 61 to 78 to 80 would be the 28 to the 17 for me. Alright, please like, share, and subscribe, because I'm coming at you with that knowledge. God bless.